Hello everybody, this is Toni Turner and welcome to the market now as of about 2 p.m. on Friday, May the 3rd. Well, Wall Street's main indexes are really happy today. They've risen steadily on stronger than expected job growth in April, which showed that the U.S. economy continues to expand. The Labor Department said the U.S. economy added 263,000 jobs in April, and the unemployment rate dropped to more than a 49-year low of 3.6%. Pretty darn good. Okay, so with that, let's, as we usually do, go on to three charts that could give us some insight into the week to come. Right now, we're looking at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now we know that the last high on the SPY was the all-time high back last September at $293.94. Now today when I captured this chart, the SPY was trading at $294.16. Now of course that's not the close yet. We did have a new all-time closing high this week on April 30th at $294.02 or 29.45 on the S&P 500 itself, but that was right back here. So now we'll have to see today if the SPY can actually close up over this, where it is right now, close up over $294.02. Again, right now it's at $294.16. We'll have to see if it can do that. And then, now that it's May, we're going to start encountering that old market saying, should we leave in May and stay away? And of course, stay away means basically for the summer. So I don't know, things are going pretty well right now. So far, this earnings season has produced better earnings than the analysts predicted, and it really has held the market up really nicely. You'll note I've drawn a pretty long-term trend line chart here from the first high, or the first low, I mean, in the beginning of January. A lot of times we don't use the absolute low. Sometimes we use the first high after a low point. And so I connected this line up through these lows here in March and moved that up. And now we see that this trend line is getting a little bit worn out here. It looks like price, we'll have to see if price can stay above this particular trend line. This is a pretty steep angle here. And then I've drawn another trend line from the February right here under these lows at this consolidation, that same point again. And if you extend that line, it comes out to just under the red 20-day moving average. It comes out to about 289. So we do have support here at 289, 290 where the 20-day moving average comes in. Of course, we have more support here at about 285, we're going to call it. And that's where the 50-day moving average is coming in. Of course, we have more support down here at 280 or 2800 on the S&P 500. So we have nothing to complain about here. With the market at all-time highs, we're going to have to just hang on and see if the SPY can hang on to its current levels. Maybe it can even climb above the highs we're seeing right now in the coming week or weeks, or conversely, we need to be wise here. We need to see if the SPY is going to lose a little of its giddy up here, maybe take a little rest and then take another shot at those highs. So I am looking, if we see a little weakness come in, I'm going to look to trim a few of my profits off the table. I'd like to have some cash for new opportunities. With that said, let's go on to our next chart. Our next chart here is a daily chart of the Invesco QQQ ETF. Now, QQQ is the symbol, of course. As you all know, the QQQ represents the NASDAQ 100. It's a very important index in the market. The holdings of the top 5 holdings of the QQQ are Apple, Microsoft, Amazon, Facebook, Google. And we can throw Netflix in there if we want, but the top 5 are the ones I just said, and they represent 43% of the fund's holdings. Now, recently, Microsoft, Amazon, Facebook, Alphabet, and Apple, came out with really good earnings this season. And it took the Qs to a new closing high up here on April 29 of $191.02. And when I captured this chart today, strangely enough, the Qs are trading right at that high. They're trading at, or it, I should say, is trading at $191.02. So, of course, we are above those highs that were set in August and September. We're up above that. So, just like with the SPY, it has been overbought in the short term on the 14-day RSI. The SPY has the same thing. Almost all these indexes have been way overbought. The RSI line has risen above the 70 line, meaning it's overbought, pulled back a little bit in the last few days as the QQQ has consolidated. So again, it's still atop its 20-day moving average, which is coming in as support, is $187.76. We have more support down here for the Qs at about 183. Then, of course, the 50-day moving average is coming in here now at a little over 181. So also, should the Qs have to pull back, there's plenty of price support and indicator support. But we can see in the coming weeks, can the big cap momentum stocks continue this strong uptrend? That is the question. And the 20-day moving average is acting as a trend line here. Can they continue higher, or do they have to take a rest? So we'll see here. There's, again, plenty of price support, potential support, plenty of indicator support. So we'll see if they have to pull back or if the Qs actually can continue higher. Our final chart for the day is a chart we haven't looked at in quite a long time. It's the VanEck Vectors Agribusiness ETF, symbol very aptly MOO. Now, please know that I looked at dozens of exchange-traded funds, sector ETFs, industry group ETFs today. Almost all of them are overbought. Almost all of them have moved up dramatically since our drop on December 24th that almost every sector, almost every stock endured. And but the agribusiness hasn't been as strong as, say, the tech stocks. Could it be that we'll get a little rotation in here? Now that we'll have to see. The top components of the VanEck Vectors Agribusiness ETF, and this is a global agribusiness index it follows. The top components are Zoetis, Deere, Nutrient, ADM, IDEX Labs. Now, today when I captured this chart, the MOO was trading at $64.74. Now, it looks like it might be able to break out over this prior high here. If I could draw a straight line, this prior November high, it looks like, well, pretty close. It looks like it could break out over the November high of 64.72. And again, right now, this is coming in at 64.74, so it's just starting to do that. It's been consolidating along here through March, through April, but just making slightly higher highs here, slightly higher highs. And I could have drawn this line to reflect a slight uptrend here as it's walking up the 20-day moving average. So I thought that until we see if the indexes, the SPY and the Qs, can actually strongly move up and continue this uptrend, I'd like to be somewhere a little more out of the limelight, or out of the spotlight, we could say. So I'm looking at the MOO here. If it continues higher in the coming week, I may add shares of MOO to my portfolio with an initial close below the 50-day moving average as my stop. And the 50-day moving average is coming in right now at $62.79. Of course, you can make your stop tighter if you like, or looser if you like. This is just the way I want to do it right now. So if the market does continue higher in the coming week, I am going to keep an eye on the MOO, and it may be something you want to do along with me. We'll see how it goes. And now on to the next week's coming economic reports. But first, Please join us this coming Monday, May 6th, for our next session of Toni's Market Club. If you're not sure how you can make money in the market right now, let us help. During our session, we talk about which side of the market to trade, have a mini trading lesson, and I give you stocks and ETFs that may become ripe for high potential trades. Can't attend the live session? Not a problem. The recording is available to all of our members just a few minutes after the session ends. This is a low-priced, high-value opportunity to learn how to trade more successfully and how to make more money. So please join us. For more information, please go to the link on this screen or click on the button below. And now on to this week's coming economic reports. Still know, though, that the earnings season is tapering off right now, but the market could still be influenced by any large cap momentum names that are going to announce in the coming week, but we're pretty much tapering off the season. Okay, not many economic reports next week. On Wednesday, we have crude inventories. We have those every Wednesday about 10:30 Eastern. Thursday, we have our usual jobless claims and our usual natural gas inventories. And on Friday, we'll have our consumer price index. Again, please join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.